Hi everyone, it's August 18, 2021, and we're here to actually discuss the Awesome 10X Global Market Update. So let's see what happened last night. Let's take a look on the chart sector by sector. Okay, so Bitcoin actually dropped a bit, and you could see that all the Bitcoin related stocks dropped a lot. Bitfarms is dropping 16%, Hot Mining dropped 10%, Riot and Mara falling 8-9%. Could see Coinbase falling down, and a lot of your crypto related names falling down. So last night, you saw crypto-related stocks were actually dropping from its previous highs. Bitcoin is down from 48 to 45. Ethereum from about 33 to 3,000. Bitcoin Cash 700 to 635. Ripple from 1.3 to 1.1. So in general, cryptocurrency stopped and made a resistance at a $2 trillion market. So some drops in cryptocurrencies tonight, still likely. Another thing to watch, let's look at this sector by sector. Gold-related names or copper is falling down 5%. You've got Chinese stocks, although opening pre-markets down, was actually able to close above their lows, which suggests a little bit of buying pressure despite all the negative sentiment happening within Chinese stocks. Krispy Kreme actually reported some good numbers, which actually prevented it to fall further, but it's still down 4%. In general, take a look at many stocks. It was actually a down day, but you could see some stocks actually trying to recover. Too Simple rallying from $28 to $31. That is a 10% swing from red to green. You're seeing some movement where let me show to you that on a sector basis. Let me show to you how Chinese stocks as a sector started and where it ended. So Chinese stocks gets a brunt of the sell-off, but last night there was some movement above the lows. Though you started beginning pre-markets at about 2.9 and closed nearly 350 or above 15% from its lows. It extended hours is still trading at 336, suggesting some people actually buying the sell-off. Beiki down from about 1685, rallying to 18.8. Although we don't like Beiki, we are looking at it from a sentiment standpoint, looking at how the Chinese stocks in general are moving. Leaning 90 to 97. Notice the movement from red to green. From low to high, actually, all of your Chinese stocks started low but ended up on the green side. Futu managed a $10 swing from 84 to 94. You're seeing XPEV rallying from 36 to 39. EHang rallying from 23 to 24. KC 25 to 27. We are seeing a red to green movement. And apart, of course, from the fact is a lot of your Chinese stocks are actually very low. And I wanted to check how low are your Chinese stocks versus the COVID lows. So this is just a snapshot of a few stocks that I've been looking at in Chinese stocks. You could see that Douyu is actually down 55% from their March 18, 2020 COVID low. Douyu and Huya, both gaming live streaming platforms, reported their numbers this quarter, and it wasn't as bad as people perceive. So we are seeing this 50% drop, suggesting to us perhaps this $1 billion mark for Douyu. Anyway, with $1 billion in cash is suggesting some bottoming out process happening. Both Douyu and Huya both oversold even against their COVID lows. Another thing to watch is Baba. Alibaba announced NFT marketplace last night, and it seems to see that Alibaba at about $173 is now trading 3% below their COVID lows. Let me show to you that chart for Alibaba, 9988HK. Here we could see that Alibaba is getting some buyers here about 171, assuming that you're looking at Alibaba stock. Alibaba is now trading back to the COVID lows, and that's $170. And let's take a look at the charts in the US. Baba here, dropping from 20 all the way to 169, well, 173. The previous low was about 170 or 169. Further drops here would take it back to 2019 main lows of about $150. So although supports can be broken, we do think that drops here about 150 or 140 seems more of a buying opportunity rather than a selling opportunity. I took a look at Alibaba's revenue growth for the last 10 years as well. We could see that Alibaba's revenue was 50% up year over year for the quarter as of first half. Revenues for the last 12 months represents $120 billion, a 55% increase year over year. Annual revenues has actually doubled when you're comparing Alibaba 2021 numbers versus their versus 2018. So you could see this is 2018, around 40 billion here versus your 2021 revenue, which is about 120 billion for this trailing 12 months. So it is actually triple na pala, 40 to 120. Annual revenue is year on year for 2021, 109 billion, 50% increase from 2020. Quite a significant undervaluation Alibaba. So it merits to take a look on these numbers even as the market is continually punishing these stocks. Let's take a look as on a sector basis. What happened on your growth names in the US? We could see that the market is also selling them down, but not as big as before. Sentinel-1 dropping 4%, not a huge drop. You could see C Limited up 6%, even as high as 8% at some point in time after earnings call. Peloton rising from 108 to 113. The Tradex 78.79. DocuSign still trading at 285 near their all-time highs. Avalara still trading 165. Shopify 1480. We are seeing this 1 to 2% sell-off, telling us that the market is still crowded onto these favorites, whether it be the Palo Alto Networks, the Googles, the Beyond Meats, Nike, Square, or generally growth stocks. Growth stocks as a sector are not yet fully sold down, and in fact, is actually acting as a safe haven. Let's take a look on your video games as a sector. Video games as a sector did not actually have any bad news, and we are seeing some strength overall in them from a fundamental sense. So Douyu last night rallied, C Limited rallied, CD Projekt trading at 170 off from their lows, Take-Two 163 off from their lows, Ubisoft 51 off from their lows, Zynga, Zynga, I haven't read the reports, but I think Zynga had bad numbers. Need to look at that. But Electronic Arts 141 nearing all-time highs. I'd say that Activision, EA, and Take-Two is actually seen with a neutral view. The market is willing to buy them up. So as for your Nvidias, AMD, neutral with a positive bias on gaming sector. Therefore, any drops on Unity and Roblox is actually seen more as a buying entry. Roblox trading 1% down last night, dropping to 74, but managed to trade as high as 78 or 81. Unity dropping to 118, but got picked up at $120. We would see buying pressure on Unity, Roblox. Same case for any drops on NVIDIA. All right, so let's take a look what happened onto your SPACs. SPACs as a sector has still been decrepit. SPACs has still been going new lows, whether or not their earnings was good or bad. Let's see what happened to your SPACs. I think I have a SPACs list here. Here. Special purpose acquisition companies, you're seeing huge drops. Innovis dropping 14%, Ouster falling 7%, Laser falling 6%. We read the numbers on the LiDARs. It's not as bad, but we are seeing, I think, some people reacting to news that there could be higher margin requirements for companies in the special purpose acquisition or more regulation. But we do see more opportunities on these SPAC sectors, even as they're continually selling, getting sold down. So take a look at those three names if and when they fall further. From the space-related names or additive manufacturing, continuous sell-off. AST Space Mobile down 9%. It has been normal for SPACs to go down 8 to 15% in a single day. ASTS down 9%. Astra Space going down 8%. Desktop Metal falling to new lows 8%. X1 going down 5%. Gelat 966. Nano Dimension 539. As a sector, additive manufacturing and space-related names are getting a brunt of the sell-off. Healthcare is also not doing well. Let's take a look. Big drops. Semaphore dropping 18% last night. Bingo dropping 4% last night. The lone movers that was up, and Vite getting some buyers, although 1% up from about 25, now closing at 26. But I'd say PacBio still sold off, down 3%. So in general, healthcare still not getting some love. How about your wearables? Still continuously falling down and a lot of sell-offs. Immersion, despite good numbers, I saw the report, not as bad, but the market actually sold it down 10%. Arcimoto, some people didn't like the production vehicles going to be produced next year, had a big drop of about 20%. Your wearables like your Vuzi Copen is actually continuing to fall. Vuzi now dropping another 4%. Copen now trading at $5. This is already 20% down from their previous, actually more than 20% down from their earnings call. It was trading at about $7, actually 40% lower, 7 to 5. So 40% lower for Copen. Vuzi from about 14 now trading at about $11. So we are still seeing further sell-off on the entire wearable region, and no reprieve in general for your SPACs. SPACs as a sector has been selling off and still hasn't bottomed out. Wearables have been sold off. How about casinos? Casinos, you saw drops on GAN and Ellis, down 16, 13% respectively. The rest of the casinos, the traditional ones, are holding on to their gains or their relative resilience. Wynn Resorts, Las Vegas Sands, holding on, 2% down only. DraftKings, just 2% down here, about $51. Penn National Gaming, $66, down 2%. We would consider a down 2% already a winner when the other sectors are actually, when the other stocks in a single day are dropping 9, 12, 20% in a single day. Resilient names are actually mostly in your consumer staples. Supermarket like Kroger trading 4% higher. Conagra Foods still steady. Procter & Gamble still steady. Unilever, Walmart, Costco steady. The fact that there's low volatility in your consumer staples or FedEx, Target, Costco is a fact of resilience for these names. Clean energy has been, as a whole, sold down. So Clean Spark selling 15% down. Arcimoto getting sold down. A lot of your solar names getting huge drops, 3%, 5%. FCell dropping 592. Tesla dropping 665. Sunrun, SunPower still falling down south. We don't see a bottoming out, but we are actually of the view that solars or electric sector is going to benefit from the Biden earnings, Biden trillion infrastructure. So we don't see a continuous sell-off in your clean energy. Nonetheless, electrics and clean energy have had a huge burnout last night. So look at the drops. Canadian Solar dropping to about 35, 6% down. Jinko Solar dropping 6% down. Ford General Motors dropping 5% down. Ford is now trading at $13. We are seeing huge drops in the entire TAN ETF. Let's take a look at the TAN ETF or the solar sector. TAN and Q Clean are actually dropping further. How low can Invesco Solar fall? From 96, it fell to as low as 67. So we don't know if TAN will actually get a higher low here at 78. But from the looks of it, it could drop further to 68. Just brace yourself for any further sell-off on solars. Q Clean, QCLN, which is the ETF of your solars and clean energy, still dropping. The drop of the ETF is now trading at 63. It is above your higher lows of May, but consolidating nonetheless. So big winners in our view would be Solar Edge and Enphase. Any drop to Solar Edge here about 240 is suggested as a buying point. Enphase also a buying entry, even if it falls at 140. So in general, the weakness in the market cannot be understated. Your NASDAQ, however, is still steady at 15,000 because your Facebooks, your Amazons are being a crowded favorite. It's becoming a safe haven. Amazon actually dropping to about 3,150, but still considered safe haven. Apple, Facebook, steady there. Take a look at that. Google, still steady. So pretty crowded in my view. Hi, Nikki. What do you use to trade or invest? Using IBKR and interactive brokers or eToro. But in general, I'd say that the market right now is really significantly not finding a bottom. Although we may see signs of bottoming out because some of the earnings of companies are not necessarily falling down. We have to check later on. So I've been looking at some companies. Let me show you companies that I've been taking a look at. Versus the COVID lows, I took a look on some of my database. Here's what's been happening. So example, NTLA is 12x from their current COVID lows. It used to trade from as low as $11, now trading at 153. I'm seeing outperformance on genetic editing names. So it's possible that take a look at this sector. Take a look, Intelia is still steady, uptrend, all-time highs. Healthcare has been a general uptick. Moderna was being bought, although I'm very scared because this is already trading at very overbought levels. Nonetheless, I'd say that people are bullish on these vaccines and genetic editing names. If I would choose, I'd rather go for Intelia. CRISPR seemed to have bottomed out last night. Take a look at that. 118 rallying to 120. Editas, although there has been sell-offs, got picked up last night here at about 58, rallying to 61. As a sector, I've seen genetic editing being a safe haven. Take a look what happened to Beam. Last night, as a sector, Beam got picked up. Here about 102. CRISPR, Beam, Editas, NVT, Intelia. So NVT is very weak, but actually getting bought out. I'm looking forward to movement on the upside on the entire genetic editing sphere. So NVT, Editas, CRISPR, Intelia, Beam, those five. Hi, is it really an issue for Chinese stocks, for VIEs? To be honest, the issues on VIEs has been there since 2013, 2014. So if we're gonna assume that that risk is already well known, I have to say that the people over exaggerating about it is just really selling down what's already down. I'd have to say the news right now in China is that BlackRock is actually calling for people to triple down on their investments in China. I'll read this news. BlackRock is calling investors lifting allocations to Chinese markets. The research division says that the second largest market in the world is not an emerging market. It deserves an asset allocation in itself. Research unit said China shouldn't be part of emerging markets, and they should boost their exposure to the country in China by as much as 3 times. The allocation to Chinese stocks has to be 10% from 4% today to as much as 14% from an MSCI All-World Index standpoint. The BlackRock recommended allocation is 3 times to the diversified global portfolio, and with a weighting currently of about 4.2%. They're saying that the starting point is so low, the direction for travel for China is to be represented is clear. The recommendation is coming from the largest asset manager, BlackRock, which has $9 trillion of assets under management. Even at the time of heightened tensions between US and China, politicians objecting on raising Chinese companies is exemplifying a growing financial divide. The spheres of influence between the two superpowers are moving apart in the near term that could lead to further market volatility. In the long term, however, you want to get China if you have to go to China. Mid-year outlook was published this July. It is not the time to retreat. It's saying that we cannot eliminate the risk, but how much are you being rewarded for the risks? We believe that we are overly compensated at these current levels. BlackRock is investing in China despite the fact that, of course, the entire tutoring industry, which is $100 billion, just went to zero. So how big is the Chinese market? So far, we have eliminated $1 trillion of market cap in China in the last 2 months. So I've taken a look on Chinese names, and you can see actually the Chinese stocks as a sector is really trading below historical valuations. Let's take a look at this sector by sector. K-Web has already fallen about more than 60% for the last few months. From February highs of about $104, now trading at $44. That $44 is nearing the COVID lows of March 2020. And as I said, Doyu is actually down 50% from the COVID lows. COVID, despite the fact that it didn't actually suffer a material decline in their revenue sources. So it seems like, in my view, the risks is over exaggerated in China. The VIE risk, even if you wanted to list these names like Alibaba, they're dual listed. So all that Chinese investors or all the foreign investors can just actually sell their Alibabas inside Hong Kong, which is listed already as 9988 HK. So I don't see a material risk of any delisting. The delisting efforts has been a constant bearish thesis for the last 8 to 9 years. Recall that there is a movie called China Hustle that talked about Alibaba being a VIE. Okay, so so I wouldn't actually materially make such a huge effort about this VIE risk. I'd say that most of the risk in China has been known. So that said, only as people said, only God knows. But this is my risk that I'm seeing priced in. Regulatory overhang has been known in Alibaba, and financial IPO delayed is known. All the antitrust or competition is known. So the monopoly is getting broken down and opening up for smaller companies is known. Opening up the ecosystem with WeChat, it's actually positive in my view that Alibaba and WeChat are working towards opening up their ecosystems. Meaning, if you have WeChat, you can access not just Pinduoduo or JD, but also access Alibaba. Also, the $2.8 billion penalty has been paid for. So unless you are actually foreseeing that Alibaba's dominance in Alipay is actually gonna fall further, or the fact that you want to rule out Alibaba Cloud is a zero business, looking towards a bigger and better Chinese reward, the further it falls. Lots of margin of safety. I argue here that in my Faces Trader, which you can follow, this is my Twitter account, there's a lot of margin of safety being priced in Alibaba and Teladoc right now. So furthermore, you could see that March lows of Pinduoduo was $30. Unless you see that Tuotuo Mites High should fall down to about 300 million users when it has over 800 million users and growth of 240% year on year, I don't really see a huge drop with Pinduoduo, even if it's not yet at $30. So at $80, I think some people are willing to buy. That said, look at these numbers, Teladoc and Alibaba. Look at the growth. This is Alibaba 2013 to 2021. Growth has just been almost better than all the e-commerce or cloud businesses around town. Okay, thank you very much. That's it. Bye.